Let's be real. When you hear the words gold investing, you probably picture someone with thousands of dollars to spend, especially with prices hitting all-time highs. It feels like countless beginners are stuck on the sidelines, missing out on one of the most reliable ways to protect and grow their money in this unpredictable economy. But what if I told you that is not true anymore? In this video, I am pulling back the curtain on the top 3 cheapest gold ETFs you can buy right now. We are talking about getting started in gold for less than the price of a night out. So what exactly is a gold ETF? Think of it this way. An ETF, or exchange-traded fund, it's a basket of investments that trades on a stock exchange, just like a single stock. A gold ETF is designed to track the price of gold. These funds own actual physical gold bullion stored in secure vaults. And when you buy a share, you are buying a small portion of that gold. This is a complete game changer for new investors. Forget the headache and high cost of buying and storing gold coins or bars. You can get exposure to gold instantly from your brokerage account. It is cheaper, safer, and much more convenient. You can buy or sell your shares anytime the market is open, right from your phone. All right, let's get into the top 3 cheapest gold ETFs you can add to your portfolio in today. Kicking off our list at number 1 and taking the lead for the lowest cost is the iShares Gold Trust Micro. With the ticker symbol IAUM, if your main goal is to keep your investing fees as low as possible, this is the one for you. IAUM has an incredible expense ratio of just 0.09%. Now, what is an expense ratio? It is simply a small annual fee that the fund charges for managing everything. An expense ratio of 0.09% means that for every $1,000 you invest, you are paying only 90 cents a year in fees. That is extremely cheap, and it means more of your money stays invested and working for you. IAUM is specifically designed for cost-conscious investors who are in it for the long term. It holds 100% of its assets in physical gold bars, so you know you are getting the real thing. Because it trades at a lower share price, it is also a fantastic entry point if you are investing with smaller amounts of money. If you are already finding this breakdown helpful and want more tips on how to invest smarter, do me a favor and hit that subscribe button. It is completely free and it makes a huge difference for the channel. For the second ETF, we have the SPDR Gold MiniShares Trust, ticker symbol GLDM. This one is another strong contender for low-cost investing, offering an expense ratio of just 0.10%. For $1,000 invested, that is only $1 a year in fees. The difference between first and second place is minimal, and both are excellent choices. Like IAUM, GLDM is designed for long-term investors who want to minimize costs. It holds all of its assets in physical gold bars stored in secure London vaults, giving you direct exposure to the real thing. It was one of the first ETFs to introduce a lower cost structure, and it remains a popular and trusted choice for millions of investors. Our third ETF is ideal for viewers in the United Kingdom or anyone looking for additional protection in their portfolio. It is the WisdomTree Physical Gold GBP hedged, with the ticker GBSP. This ETF has a very competitive expense ratio of 0.12%, which is impressive on its own. However, its standout feature is that it is currency hedged. What does that mean? Gold is priced in United States dollars around the world. If you are investing from the United Kingdom with British pounds, the value of your gold can rise or fall depending on the exchange rate between the pound and the dollar. GBSP is designed to remove that risk. It tracks the price of gold while protecting your investment from currency fluctuations. So if the pound strengthens against the dollar, your gold investment is not negatively affected by that currency shift. It is a brilliant feature for non-US investors who want pure exposure to gold, its performance without worrying about exchange rate changes. This ETF is also backed by physical gold held in secure vaults that meet the strict standards of the London Bullion Market Association. So there you have it, a quick look at 3 of the cheapest and most efficient ways to invest in gold this year. First, for the lowest possible cost, the iShares Gold Trust Micro IAUM is the clear winner with its 0.09% expense ratio. Second, as a close alternative, the SPDR Gold MiniShares GLDM remains a proven and affordable option at 0.10%. And third, for UK investors or anyone wanting to eliminate currency risk, the WisdomTree Physical Gold GBP hedged GBSP is a smart and cost-effective choice. Investing in gold does not have to be expensive or complicated. With these ETFs, you can start small, build your position gradually, and add a layer of stability to your portfolio. Now, I want to hear from you. Which of these ETFs fits your investing strategy best? Are there other low-cost gold ETFs you believe deserve a mention? Leave a comment below and let's start a conversation. If you want to learn more about building a strong and diversified portfolio, check out my next video on the top 5 dividend stocks to buy. Do not forget to subscribe and turn on the notification bell so you never miss an update. Thank you for watching, and I will see you in the next one.